What's up, XRP family? Welcome back to Blockchain of Raw Crypto. I'm your host, and today's episode is one you absolutely don't want to miss. There's been a lot of buzz lately around one name, Jake Claver. You've probably seen the clips. People saying he knows something about XRP's timeline that he just can't talk about, and honestly, it's got everyone in the community asking the same question. What exactly does Jake know, and why is he so confident that XRP's explosion is inevitable? Now, I've been getting flooded with DMs, people sending me clips asking me to break this down. So, let's do what we do best here. Analyze this from top to bottom, cut through the hype, and figure out what's really going on behind the scenes. Because when someone like Jake Claver, a guy who's been consistent with his thesis for over 18 months, says something big is about to happen, it deserves our attention. So, let's start with this. In one of the recent live sessions, someone asked Jake directly if he knows something about XRP's timeline that he isn't allowed to reveal, and he didn't deny it. He smiled, thanked the super chat, and simply said, "Hopefully, you're as excited as I am." That's it. No denial, no clarification, just that confident tone that tells you he might be sitting on something significant. Now, most of us know in the world of finance and digital assets, NDAs are very real. If Jake's involved with partnerships, advisory roles, or institutional clients, there's a high chance he's been given access to information that the public simply can't see yet. Then there's the clip that really got people talking. Jake saying, XRP reserves are vanishing fast. Understand the mechanism behind the coming supply shock before the market wakes up. And that line right there, that's not just talk. That's a signal. A signal that something big might be unfolding beneath the surface. When reserves start disappearing off exchanges, it usually means one thing: accumulation. But by who? That's what we need to uncover. Now, I want you to think about this for a second. Jake's been talking about this so-called domino theory for a long time, but here's the twist. That theory wasn't even his to begin with. He just adapted it to fit the XRP narrative. The idea is simple but powerful. Once the first major financial shift happens, everything else follows in sequence. One domino knocks over another, and before you know it, global liquidity has a new backbone, potentially XRP. But what stands out to me isn't the theory itself, it's Jake's conviction. He's been repeating the same message week after week, month after month, for almost 2 years now. No change in stance, no backtracking. That kind of consistency doesn't come from hype, it comes from confidence. The kind of confidence that suggests he's seen data or movement we haven't. And when you look back, a lot of what he's hinted at has started to happen. The reduction of XRP supply on exchanges, increasing institutional engagement, Ripple's major corporate acquisitions, and ongoing hints about integrations in global payment systems. He's been talking about these steps long before they became visible in headlines. So if his domino theory is based on watching how these global pieces align, we might already be in the early stages of what he's been predicting. So what does that mean for us, the everyday investors? The XRP community, the ones holding through all the noise? It means we need to start reading the signals more carefully. It's easy to get lost in the hype, but when you connect dots the way Jake seems to be doing, the story gets clearer. XRP's setup isn't random. The slow disappearance from exchanges, the quiet regulatory movements, the partnerships forming across continents, they're all part of a larger picture. In this video, I'm going to unpack all of that. We'll dig into Jake's theories, the government debt angle, the liquidity warnings, and even that bold 10 XRP prediction everyone's talking about. But before we go there, I want you to ask yourself one question. What if Jake Claver isn't just speculating? What if he's preparing for something that's already set in motion, something much bigger than we think? Because if that's the case, then XRP's next move might not just be a price breakout. It could be the start of a financial reset. And that's what we're going to uncover here on Journey to XRP. Alright, let's keep going, because the deeper we dig into what Jake Claver's been hinting at, the more this starts to sound less like speculation and more like preparation. Now, there's one statement he made that I think people really need to focus on. He said, "My thesis hasn't changed in 18 months. Think about that. In a market that flips sentiment every other week, for someone to hold the exact same conviction for a year and a half straight. And that's not luck. That's knowing something. Jake's confidence comes from what he calls vindication. He's seen step by step the things he predicted slowly come true. The legal clarity Ripple's achieved, the steady partnerships Ripplet keeps forming, and the progressive migration of liquidity off public exchanges. These aren't wild coincidences. They're visible trends if you're watching closely enough. He's basically saying, look at the evidence, not the noise. And that's where a lot of people get it wrong. They expect fireworks overnight, but the real transformation is happening quietly in the background. Then comes his point about the US debt. This is where it gets really interesting. Jake mentions that the US might actually have a digital solution to its debt problem, something no one's officially talking about. He frames it like this: to pay off debt, you either raise assets or reduce liabilities. But what if, hypothetically, the US government already has a massive digital asset on its balance sheet that's never been disclosed, something like XRP? Now, before you roll your eyes, it's not as far-fetched as it sounds. Remember, the US has seized, sold, and held crypto assets before, and as David Sachs said, there's been zero public auditing of what digital assets the government truly holds. If XRP is sitting quietly in those reserves, it changes everything, because if that asset were to suddenly appreciate in value, even without revaluation or any price setting, it could offset portions of the national debt. It's not about paying it off directly, it's about balancing the books. If your assets rise in value while your liabilities stay fixed, you regain leverage. And if you think that sounds crazy, go look at what institutions do every day. They rebalance portfolios, leverage equity against debt, and move assets strategically to stay solvent. Why would governments be any different? But Jake doesn't stop there. He explains how governments have always had a way out: printing money. That's what makes the US so powerful. The dollar has been the global reserve currency. But as we move toward a digital financial era, that privilege might not hold forever. If another system, say XRP or a similar bridge asset, takes a global liquidity role, the US can't just print its way out of problems anymore. They'll need new mechanisms to maintain dominance, and that could involve controlling or at least having a stake in the infrastructure of global digital payments. That's why Jake's theory about companies like BlackRock CK being set up as key players in the transition makes sense. He's basically saying the US might be planning to disrupt itself strategically, not accidentally. Imagine deliberately orchestrating a financial reset that keeps you in power while the rest of the world scrambles to catch up. You'd want to own the bridge, you'd want to hold the rails, and if XRP is part of those rails, even in a small capacity, that's leverage on a global scale. The most compelling part here is Jake's tone. He's not hyping it for clicks or playing the get-rich-quick game. He's methodical, calm, and precise. And that's what's got the XRP community's attention, because when someone that composed starts talking about guaranteed outcomes, people listen. But we also have to balance that with logic. Even if Jake is right about the direction, the timeline is always the wild card. He might know something under NDA, but market dynamics, regulation timing, and geopolitical moves, those things never follow a straight line. So, here's where I stand. I don't think Jake's blowing smoke. I think he's interpreting something real. Maybe not in exact timing, but in trajectory. He sees where the chess pieces are being moved, and if you've been following the XRP narrative long enough, you know this game isn't random. It's global, it's strategic, and it's bigger than any single influencer or price prediction. The key takeaway here, and I want you to really sit with this, is that XRP's story isn't about speculation anymore, it's about positioning. Whether Jake's right on the exact timing or not, the fundamentals, the partnerships, the regulatory progress, and the liquidity shifts all point in one direction. XRP is being positioned as a major component of the next financial infrastructure, and that's something worth paying close attention to. Now, let's move into the next layer of this story, because what comes next is where Jake Claver's theory starts connecting with the mechanics of how this entire financial shift could actually happen. When Jake says XRP could play a role in offsetting the US debt through market dynamics, he's not just throwing buzzwords, he's describing how the system could self-correct once the right conditions are triggered. Let me explain what that means. Jake made it clear no one, not even Ripple, can simply revalue XRP by decree. David Schwartz himself confirmed that there's no single authority who can wake up and set a new price for XRP. That's not how markets work. The only way XRP skyrockets is through demand, liquidity flows, and utility, and that's where the domino effect comes in. Imagine this. Once XRP starts being used at scale for institutional settlements, once those corridors open up, and once debt or reserve systems start leveraging digital assets, every other market reacts. One catalyst leads to another, and the valuation of the asset naturally multiplies. So, when Jake says the government doesn't need to revalue anything, he's right. They can let the market do it for them. They can create catalysts, shape liquidity environments, push adoption through partnerships and policies, and suddenly XRP's price responds. This is exactly what institutions do with stock valuations and commodities. It's just that in crypto it happens faster and more transparently. If you connect that idea to Ripple's expanding web of partnerships, central banks, fintechs, cross-border payment systems, it's not a stretch to imagine how market-driven value expansion could play out. Now, here's where the speculation turns into something that feels almost strategic. If the USCH or any major government does hold XRP, even quietly, they'd benefit from that appreciation. Jake's example was striking. If the US held XRP worth, say, $250 and the market took it to $2,000, that's a 700 times increase in asset value. That kind of move would drastically change the government's balance sheet without printing a single dollar. They wouldn't have to sell it. They could simply borrow against it, collateralize it, or offset liabilities. In other words, they'd use XRP like any other powerful financial instrument. And this is where Jake's idea about being your own bank connects perfectly. That's what he means when he talks about digital wealth partners model. The same principle that applies to individuals also applies to nations. You build leverage around your assets instead of depleting them. You use appreciation as a weapon against debt. And that's the mindset of the new digital economy. The traditional system is based on fiat expansion. The new one is based on asset utilization. Now, let's step back for a second, because this isn't just about the US. The global financial order is shifting, and the dollar's dominance is being challenged. The US has been able to control liquidity for decades because it's held the world's reserve currency. But when digital systems take over, whoever controls the flow of digital value becomes the new powerhouse. If XRP is part of that flow, even as a bridge, not a replacement, the implications are massive. Jake's point is simple. The US knows this, and they're planning accordingly. They'd rather lead the disruption than become a victim of it. That's why we're seeing huge institutions positioning themselves quietly. Companies like BlackRock's HK, Fidelity, and others forming digital divisions, investing in tokenization and integrating blockchain settlement systems. It's not random. These moves are coordinated, and if XRP ends up sitting at the core of those systems as the bridge asset that moves value globally, frictionlessly, and instantly, the game changes. This is why I keep saying on this channel that the people who think of XRP as just another crypto asset are missing the bigger picture. It's not about if it pumps to $10 or $100, it's about why it will move. What's fueling that movement? The convergence of debt, liquidity, and digital value rails could make XRP one of the most strategically important assets in modern history. That's not macroeconomics. And Jake Claver's role in this narrative, whether he's revealing all the details or not, is to point the community toward that bigger understanding. He's not predicting price for hype. He's connecting dots most people don't even see. When he talks about orchestrated catalysts and controlled market shifts, he's hinting that the stage is already set. It's not about waiting for permission. It's about recognizing when the system starts moving. So, if you've been watching XRP for years, this is the moment where all the groundwork starts making sense. The partnerships, the technology, the patience, all of it builds toward this convergence. And that's why, in my opinion, Jake's confidence doesn't sound crazy at all. It sounds like foresight, and maybe even a glimpse into something that's already begun. Alright, let's dive even deeper, because this is where Jake Claver's tone shifts from theory to conviction. And honestly, that's what makes people listen. He doesn't sound like someone guessing. He sounds like someone waiting for a timer to hit 0. Jake openly says his thesis hasn't changed in 18 months. Think about that. In a market where influences change opinions faster than you can refresh a price chart, this guy has stayed rock solid. Every new development, from Ripple's legal victory to the growing institutional adoption of ISO 2022 compliant assets, just reinforces what he's been saying all along. He's not reacting to the market, he's tracking the playbook. And it's not just Jake talking in a vacuum. When you line up the macro trends, the global debt crisis, central banks racing to launch digital currencies, and corporations quietly integrating blockchain, it becomes hard to dismiss the possibility that he might actually be onto something. The US Treasury still hasn't disclosed the full scope of its crypto holdings, and that's not a small oversight. That's deliberate. You don't sit on $1 trillion technology shift and fail to account for it, unless you're strategically keeping it off the books for a bigger reveal. Now, here's where the speculation turns into an economic puzzle. Imagine the US government holding XRP, not as a speculative asset, but as a strategic one. They wouldn't need to declare it. They wouldn't even need to sell it. All they'd need to do is hold it while the market value rises. As Jake explained, if those assets appreciate, say, from $250 to $2,000, that's a 700 times lift. Suddenly, the government's balance sheet doesn't look like a sinking ship. It looks like a stealth submarine loaded with digital torpedoes of value. And you know what? That tracks perfectly with how governments historically handle debt. They never eliminate it. They absorb it. They inflate it away. And in the digital age, they might just tokenize their way out of it. Now, what makes Jake's take even more fascinating is how it ties to market manipulation and orchestration. Not in the shady sense, but in the structured one. Governments and large financial entities engineer liquidity events all the time. Quantitative easing, interest rate manipulation, currency swaps, it's all market control, so imagine that power translated into digital assets. Instead of printing money, they could strategically use blockchain networks, smart contracts, and market catalysts to drive value shifts. The result, an organic-looking rally that's actually perfectly timed. This is why the concept of domino theory makes sense here. One event triggers the next. Regulation creates clarity. Institutions enter. Liquidity grows. Adoption increases. Utility spikes. Price responds. Each domino is perfectly aligned. Jake isn't claiming to know the exact hour the first one falls, but from his language, it sounds like he's seen the setup. Then he adds something that hits hard for long-term holders. I wouldn't keep repeating this for years if it wasn't a sure thing. And that's not bravado, that's fatigue. The kind of confidence that comes from seeing too much evidence to walk away. And while some people write him off as overly bullish, you have to remember that every major shift in financial history started with people sounding exactly like this: certain, focused, and patient. Think back to early Bitcoin believers, early internet investors, or even those who foresaw gold's resurgence in the 70s. They all faced disbelief before vindication. Now, you and I both know markets are unpredictable, but when you have someone this connected, this consistent, and this unwavering, it makes you stop and think. Maybe it's not a matter of if XRP explodes, but when. And that's where I start asking myself, what if Jake's countdown isn't about hype at all? What if it's just about alignment, regulation, liquidity, and timing all clicking into place at once? Because when those dominoes start to fall, history tells us the market won't politely knock. It's going to kick the door down. So whether you're skeptical or convinced, this is the time to be awake because the signs are there. And like Jake said, once it starts, it'll move faster than anyone expects. And now here's where things start getting almost cinematic because Jake Claver doesn't stop at the macro narrative. He dives into the mechanics that could actually make it happen, and this part honestly is what separates hype from structure. See, he doesn't say someone will just walk up and declare XRP worth thousands of dollars. In fact, he says the opposite. No one has the authority to set that price. There isn't a single government or global body that can just announce, "Hey everyone, XRP is now worth $2,000. That's not how markets work. But, and this is the key, markets don't need permission to reprick assets. When demand and utility converge, they just do. When demand spikes, when liquidity shifts, when utility hits critical mass, price discovery becomes brutal and fast. You don't even see it coming until it's already happening. And Jake's whole argument about market dynamics replacing revaluation suddenly makes perfect sense. The market doesn't wait for an announcement, it reacts to a catalyst. Now, the real kicker is how he ties that to the US debt problem. This is where I had to hit pause and just process the scope of what he was implying. He said, if the government held enough XRP and the price moved thousands of % higher, they could offset their liabilities simply through valuation. Think about that for a second. They wouldn't need to print another dollar. They wouldn't need to raise taxes. They just need to let market forces lift the value of their digital reserves. Suddenly the balance sheet looks clean, not through magic, but through mathematics. And if you zoom out, that's the same system that the US has relied on for decades. Every crisis gets solved by finding a new way to inflate asset values, housing, equities, treasuries. Now, imagine the next iteration of that process being digital assets. That's not a fantasy. That's a continuation of history. Jake also points out something that most people overlook. Governments and central banks are already acting like this transition is happening. They're quietly building infrastructure. They're funding partnerships. They're investing in companies that sit on the rails of the new system. So when he says institutions are already positioning themselves through entities like BlackRock or G Treasury, he's not exaggerating. These are the very pipelines that move liquidity once the green light flashes. And here's the part that hit me personally when Jake said they can orchestrate catalysts. That's not a conspiracy theory. That's policy, management. Governments orchestrate catalysts all the time. They manage narratives, regulate selectively, and move sentiment strategically. So, when you start seeing synchronized headlines, coordinated policy statements, and liquidity spikes, it's not random. It's preparation. And that's exactly why people in the XRP community stay from analysts to everyday holders, keep watching for these little shifts. A new partnership here, a legal clarification there, or a sudden drop in exchange reserves. Because these are the clues. The breadcrumbs that mark the trail toward that eventual explosion Jake keeps hinting at. Now, let's talk about that word, an explosion. Everyone gets hyped by it, but what he really means isn't a random moonshot, it's a supply shock, a liquidity crisis in reverse. When XRP starts getting absorbed by institutional corridors, private ledgers, payment rails, treasury integrations, it won't just reduce supply, it will lock it away from retail access. That's what we're seeing right now with coins vanishing off exchanges. It's not retail dumping, it's strategic repositioning. And if that continues, the remaining float becomes incredibly thin. So when retail demand returns, you're not going to see a slow climb. You're going to see price compression so intense it looks explosive. That's how these market dynamics actually play out in the real world. So when Jake says XRP is going to explode, he's not talking about hype. He's talking about math, liquidity, and timing. And every single one of those dominoes is lining up faster than people think. And that brings me to the bigger takeaway here. This isn't about whether you believe Jake Claver or not. It's about recognizing that the system he's describing already exists in motion, and whether you're ready or not, when these dominoes start to fall, it's going to rewrite how people see value forever. Alright guys, welcome back once again to Journey to XRP. Jason William here, and let's wrap this one up strong. Now, Jake Claver recently dropped a clip that's been shaking the XRP community. He talked about XRP possibly hitting $10 by the end of October, and not just as a random number, but with a strong chain of reasoning behind it. He mentioned oil prices, macroeconomic shifts, and the domino effect that could accelerate once the system flips. He said, when it happens, it's going to move extremely fast, faster than most can even react. And honestly, that's what we've seen before in these markets. When liquidity flows, when narratives align, and when utility becomes clear, everything changes overnight. The ones who understand that timing are the ones who stay ahead of the crowd. Now the timing aspect is crucial here. Jake suggested that this explosive move could line up right around Ripple Swell, the company's major global conference where big announcements often drop. And let's be honest, it makes sense. When institutional investors, regulators, and fintech leaders gather in one place, it's never just another event. These conferences are where strategic partnerships are announced, where deals are hinted at, and where narratives are formed. Even though we've seen other crypto ETFs approved recently like Litecoin and HAR, it does feel like the XRP ETF story might be building quietly in the background. These are the kind of setups that don't happen by accident. It's all about timing and positioning. So, let's think long-term. Whether XRP hits $10 next week or not, the underlying fundamentals haven't changed. The network is expanding. Institutional adoption is growing, and the liquidity narrative is becoming more important by the day. The big players are quietly positioning themselves while retail gets distracted by short-term price swings. And here's what I always say. Patience is power in crypto if you understand the bigger picture. You're not shaken by small moves. You plan your exits, manage your risk, and prepare for the volatility ahead. Because when the moment comes, and it will, you don't want to be reacting. You want to be ready, and that's why I love making these videos. This channel isn't about hype. It's about understanding what's actually happening beneath the surface. The patterns, the timing, the money flow. We break it down in a way that makes sense so you can make informed decisions, not emotional ones. So, if you found value here, hit that like button, drop a comment, and let me know your thoughts. Do you think XRP can actually hit $10 by the end of October? Or are we looking at a longer timeline before that domino chain reaction plays out? And before we close, I just want to make this clear. This is not financial advice. The crypto market is highly volatile and carries significant risk. Always do your own research, analyze multiple perspectives, and only invest what you can afford to lose. My goal here is to help you think critically, not tell you what to buy. Thanks for being part of Journey to XRP. We're building one of the strongest, smartest communities out there, and it's all because of you guys. Until next time, stay informed, stay patient, and as always, stay ready. XRP Army.